It's Jay Meisler here with the look ahead to the week starting December 8th, 2014. This comes off a week where the dollar is ending on a firm note across the board, led by dollar yen. Now, what was interesting with dollar yen is it broke above 120 without an apparent catalyst, and then got a kickstart after the above and well above consensus U.S. Jobs report, non-farm payroll. So this sets the stage for next week. Next week there's a light calendar. There's a bunch of data on Thursday and some more on Friday, but not what we call game-changing data. We do have Aussie jobs report coming out midweek as well. So that's the market's going to have to carry over from the U.S. Employment report, and that should keep the dollar on a firm footing. Now, one point about Mondays. Mondays have been tricky. We have not seen a lot of follow through on Mondays, and much depends whether there are any more stops to run. So you got to keep that in mind, and also time of year. But I think after next week, then we start thinking about the pre-Christmas book squaring. But for next week, the dollar should stay on a firm footing, or at a minimum in a buy on dips mode. Now, if you look at dollar yen here, and I'll put that up. It's the weekly chart, and in the weekly chart, and I've been using this for quite some time. You can see the break above here, which is around 118, shows very little into 124.16. When you get into this uncharted territory, I use big figures, and one of the big figures that we're using next is 122. So 122 really becomes the key level on top. As long as we stay above 120, the market will be in a buy on dips mode. But to suggest buying at 121 right now is difficult if you're not on the market. But just suffice to say, unless we go below 120, the market will be looking to buy dips in dollar yen. Key here is whether 122 gets taken out. Now, as far as the euro dollar goes, this is a level I've been circling on my chart for the longest time, especially after we decisively took out 126.62, and that's 120.40. That is my key target on the downside, but the euro dollar has been lagging, I say, a little bit, especially on Friday's move, although it's down and briefly broke yesterday's Thursday's 122.79 low. It has not been the leader. So, as the market debates whether the when, if, now if, because of the German opposition, there will be QE. Not a reason to buy euro, but it's caused somewhat of a pause. But if you look at the weekly chart, there's no chance of the trend line being taken out. So let's revert down to some other levels here. We look on a daily chart. You got a trend line right here. The closest trend line that I've been using is above 125. That's probably safe for next week. Go to the 4-hour chart. This trend line held here, so it's really the key trend line. I look for things that are holding. We got 3 data points here, so this is the key trend line I use. It's 124.66, so that's not really one I would run after as well. That should be safe next week. And the other one that I've been using here is, and I've been pointing this out since October now, the 200 period 4-hour moving average. As long as you stay below it, my bias will stay down, and it's been below it since October 29th. So this 4-hour trend has been going on for some time, and there's no reason to fight it. Although, as I said, the way this market has been working, Mondays have been tricky with no follow through. We saw a big correction on Monday, and in this regard, I suggest you read my articles this past week on retracements. They're very revealing, and they've been working very well. 1 hour, look at the chop in the 1 hour. I'll leave that, but you might want to focus on the 100-hour moving average, currently 123.82, as it held the market here and it held again here. So that really sums up for the week ahead. Dollar will be on a buy on dips mode. Question is how deep the dip. It's hard to find a really suggest a really deep one right now, but Mondays have been tricky and been profit-taking days and no follow-through days from the Friday close. So keep that in mind. But often that Monday sets up a move in the other direction once those retracements run out of steam. So that really sums it up for now. I will suggest one thing. I'm going to put a link at the bottom of this page. It's about our pivot point system. It's been working really well, especially the R3 and the S3, especially those that are with the trend, meaning when it retraces, you'll see R3 holding or S3 holding 95% of the time according to our back test. So I really suggest maybe looking at that. And that's it for the coming week. So good luck, good trading. Beware of Mondays, but overall dollar uptrend should stay intact.